Welcome back. This is Bazaar Morning Call. It's a Friday morning. The Indian markets have been consolidating in a range, but the volatility has eased over the last couple of days, and the broader markets have started seeing a lot of buying. So this week to date, while the Nifty is up 0.2%, the mid-cap index is up 1.9%. So the broader market undertone is fairly bullish. And this morning, too, there are lots of individual stocks to track. Our entire research team is standing by. This is CNBC-TV18's list of top stocks to watch for the day. Mangalam, the big one to watch, the most talked about, Zomato. How are the numbers?
Most talked about indeed, and the new age businesses invite a lot of opinion as well as discussion and memes, etc. on social media. But let's stick to the basics here. The results versus what the street was anticipating. Revenue grew 17% quarter on quarter. ISEC was expecting a 6% growth, so it's a beat out there. Food delivery gross order value was slightly slower in growth as against expectations, but then again, EBITDA loss was narrower than what the street was anticipating as well. Contribution margin of 5.1%, bang in line with CLSA estimates, and even the food business margins at 2% in line with CLSA's estimates. What is good is that their food business EBITDA came in at 23 crores versus 2 crores quarter on quarter. The company's maintained its adjusted EBITDA ex-Blinkit positivity by Q2 FY24. This is something that they've reiterated, and they are targeting 4 to 5% of gross order value as medium-term EBITDA target as well. What's not good is that there is a slowdown industry-wide, and this happened post-Diwali. In fact, revenue declined by 1% quarter on quarter, and for that itself, the company will have to invest in Zomato, Gold, etc. to support growth further. Blinkit, while the revenue grew, we did see an EBITDA loss of 205 crores out there as well. On that, the company believes that the things are improving. They can grow their dark store network by 30 to 40%. And at the same time, in the food delivery business itself, they've exited about 225 stores to maintain their profitability. Plus, they have cash on books of around 11,300 crores, which is about 25% of their market cap. My sense, the stock may see some green because revenue and operational performance is better than expectations, and the cash provides its support.
Okay, thanks a lot for that. It would be most interesting to see how the stock reacts today. Goldman Sachs put out a report where they said that in the near term, there is potential pressure on their profitability because of the reasons that Mangalam was mentioning, the dark store expansion as well as the launch of Zomato Gold. So let's see, this one's going to be a good one. But from food, let's move to drinks. Surbhi is here to tell us how United Breweries look this time around. Surbhi, over to you.
United Breweries reported a very weak set of numbers. The revenue growth was muted, only 2% on a year-on-year basis. The sharp inflation in glass and barley prices have led to a gross margin contraction of more than 800 basis points. This has also led to a 56% decline in their EBITDA, with EBITDA margins contracting almost 700 basis points. PAT before their exceptional item was at 31 crores, down 66%. Now, the company has booked 33 crores as impairment charges on their Andhra Pradesh and Tamil Nadu plant and equipment, which is implying that the company is not expecting sharp sales recovery from these states. Now, analysts estimate the volume growth for this quarter is 4%, and that is impacted by the sales in the states of Andhra Pradesh and Tamil Nadu. Given a massive miss in their estimates, you can expect the stock to be under pressure today.
Wondering how that happens, Surbhi. Anyways, we'll expect that stock to open up in the red. United Breweries, a disappointing set of numbers. Well,
maybe people are getting healthier, maybe.
Maybe we didn't do our bit. Anyways, let's go across to Sonal. Sonal, HPCL numbers are good.
Oh yes, they were. It was a beat and surprisingly led by their marketing segment because HPCL has more exposure to that particular segment. Now revenues, they were flat at 1.09 lakh crore rupees, absolutely in line with estimates. The company reported an EBITDA of 1,277 crore rupees. This compares with the loss in the quarter gone by and higher than estimates of 921 crore rupees. Profits also came in at 172 crore rupees versus a loss, and the expectation was of a loss as well. So definitely it's a beat on the bottom line as well. Refining margins, however, were lower than estimates, $8.9 per barrel versus estimates of $13 per barrel. But as I said, it was a marketing-led beat. So marketing sales was up 6.7% on a YOY basis, 8.5% on a quarter-on-quarter basis, and it was higher than what the street was working with. ICICI Securities says they are estimating that marketing losses have contracted sharply. They have come in at 1.6 rupees per litre versus 7 rupees per litre in the quarter gone by. Jeffrey says yes, that quarter 3 was ahead of their estimates, but they will revise their estimates only if there is some clarity in terms of 30,000 crore rupees allocation to all marketing companies in the budget, what really it means for these companies. But yes, it was a beat as far as quarter 3 numbers are concerned.
Thank you very much for that. Let's find out how LIC's numbers look. Surbhi joins in with the details. Surbhi.
LIC reported their Q3 numbers and they don't look so exciting. Remember, these numbers cannot be compared on a year-on-year basis, and when you look at the numbers sequentially, they don't look too impressive. For Q3, even though their individual APE is up 7%, the total APE is down 18% at 12,317 crores. The value of new business, that is down 20% sequentially, and the margins are marginally down by 60 basis points. On a 9-month basis, the new business premium is up 8%, the gross premium is up 21%, and the AUM is up 11% at 44 lakh crores. More importantly, their market share in policies is down 2%, which is a little concerning. The number which is not declared this quarter is the embedded value. Even though the management has indicated a good growth in embedded value for FY23, that remains an overhang for the stock, because remember, life insurance companies are valued at price by embedded value. The con call is scheduled this morning, so we will get more commentary from the management, but for now, it's a muted performance by LIC.
Thank you very much for that. Not done just yet. We've got pharmaceutical stocks to track. Ekta joins in. Ekta, how did Aurobindo Pharma, Lupin, and you're also looking at IOB?
Well, yes, it's definitely a mix this morning. I'm going to start with the two big ones in the pharmaceutical space. Aurobindo, where the revenue was up 6.7%. The street was estimating a flat growth, so that's better than expectations. Margins improved to 14.9% versus 13.8% Q-on-Q, and versus estimates of around 16% Profit also came in at around 491 crores. That missed expectations, but the street is going to be looking at two factors: the margins, which have improved, as well as the US revenue, which is coming at $366 million versus estimates of $350 million. The board is also going to be transferring their API non-antibiotic business via slump sale worth over 3,300 odd crores to a wholly owned subsidiary. So the street will watch out for what the rationale is behind that. Now the call is at 8:30 a.m. Lupin, margins at a 5-quarter high, US sales at a 3-quarter high. India is a single-digit growth for the second consecutive quarter, so that's probably a bit of a dampener. But revenue up 4%, margins 12.3% versus estimates of around 12.2%, so bang in line, and profit of around 153 odd crores. And there's a sequential improvement in margins, which the street will like. US sales better than expectations, $177 million versus estimates of $165 million. So that's definitely going to be a positive. Now moving to the banking space, IOB, NII, which was up 44% year on year. Profit, which was up 22% year on year. Net interest margins have improved as well to 3.27%. Gross NPA ratios as well as the net NPA ratios are better. So I expect all three of these stocks to possibly be in the green. Aurobindo, remember, also depends a lot on commentary.
Okay, we'll watch out for the commentary from Aurobindo. Thanks a lot for that. But by far, the most important stocks to watch today could be the Adani Group stocks after the MSCI rejig that will take place. Vivek is here to give us the fine print. He's been on top of that story since day one. Vivek, over to you.
Well, good morning. Well, you know, what's actually happened is that the uncertainty has now given way to quite a bit of clarity as to how exactly the Adani Group stocks will be treated as part of the MSCI Global Standard Indices. So, out of all of the Adani stocks that are part of the MSCI Global Standard Index, in this particular review, there will be a slight weight decrease as far as 4 of the names are concerned. So, like we highlighted, the top 3 names that had the highest weightage within the MSCI Standard Index, which is Adani Enterprises, Adani Total Gas, and Adani Transmission, will see a weight decrease today, and these changes will be effective from Feb 28. So as per analyst estimates, Adani Enterprises expected to see an outflow of close to $185 million. Adani Total Gas expected to see outflow of close to $125 million. And Adani Transmissions expected to see outflow of a little over $155 million. So the stocks continue to be a part of the index. In this particular review, you know, the weightage has been decreased, and it is now, you know, we'll have to wait and watch whether in subsequent reviews there is a decrease or whether there is a deletion of the Adani Group stocks. It will largely depend on the stock price performance. Along with that, Adani Total Gas also has declared its results. It's a largely inline set of numbers with a slight increase as far as the profitability is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Vahista. Vahista, you're tracking a few numbers. Voltas look disappointing, right?
That's right, Nigel. Of course, another quarter of disappointment for the company. Revenues up 12%, but margins have dipped to 3.8% versus 8.8% in the same quarter of last year. And due to some provisions of 137 crores, the bottom line has turned negative in this quarter. Now, moving on to Voltas' biggest segment, which is the unitary cooling products division. Given that Q3 was anyways a lean season for the cooling products, the revenues from this segment have grown by meager 11% versus its peer Blue Star, whose UCP division revenues grew by 15%. That's point number one. Point number two, another negative has been a fall in profitability for the UCP segment by 13% on a year-on-year basis. And the last and most important point, the market share, the room AC market share has again dipped. Forget about maintaining the existing market share. It has dipped further to 22.5% as on 31st of December 2022. While we compare it with 31st of December 2021, it was at 25.9. So that's a sharp dip. All in all, there are more negatives than positives in the result, and hence I'm going with a red on the stock. But another stock which also released their results yesterday post-market in the defense space has been MTAR Tech. Good results, revenues have doubled, and order inflows are up 41% on a quarter-on-quarter basis, which has come into excess of 800 crores. Back to you.
Okay, thanks a lot for that. So we'll watch out for MTAR Tech on the upside and Voltas on the downside. In case you missed out, here's a quick recap for you. Stocks with positive news flow today. There's Zomato, there's HPCL, Aurobindo Pharma, Lupin, Indian Overseas Bank and MTAR Tech. While stocks with negative news flow, there's the Adani Group, United Breweries, LIC and Voltas. But let's also find out what's happening in the world of commodities. Brent crude has been inching up higher in the last couple of days. But what's the latest today? Manisha Gupta is here with all the action. Manisha, good morning.
Morning, and thank you for that. Well, after 4 days of gain, we've seen some bit of a decline come in for the crude oil prices. The percentage point decline is how we closed the overnight market. This is after the U.S. crude stocks have risen to the highest since June 2021. While there is recovery in global demand, and that would be supportive, and so will the case that there are shutdowns in Norway and Turkey, is the reason you're still holding above $84 per barrel for the crude oil prices. What has seen a sharp decline, though, has been the precious metal prices. 1 month lows for gold prices now, and this is headed for a second weekly decline for gold and silver both. The US dollar index seems to be finding a bottom, and rising short-term yields also are weighing onto the markets. And within the base metal prices, it is copper, which is the top favorite. So even as the other metals have been choppy, copper prices continue to trade firm today in Asia as well.
Manisha, thank you very much for that. Need to slip into a very short break. We'll come back and discuss more stocks. Gurmeet Chadha, managing